Welcome to the first module of our Florida Real Estate Investing Masterclass. In this session, we'll set the stage for everything you're going to learn throughout the course. By the end of this video, you'll understand why Florida is such a powerful market for investors, the 4 major property investment categories you can focus on, and what kind of results you can realistically expect, both the opportunities and the challenges that come with them. Part 1, introducing the Florida market, visuals of Florida map and growth statistics. Florida is one of the most active and resilient real estate markets in the United States. Every week, thousands of people move here. Retirees, remote workers, international buyers, and entrepreneurs, all drawn by the sunshine, the lifestyle, and one huge advantage: no state income tax. That constant population growth fuels demand for new housing, rentals, and commercial space across the state. Even during national slowdowns, Florida's real estate tends to rebound quickly because the fundamentals remain so strong. Steady job creation, tourism, and service-based industries, a limited supply of buildable land along coastal zones. But what really makes Florida exciting for investors like you is the variety. Who can invest in a beachfront condo, a suburban rental, an empty lot, or even a small commercial plaza, all within a few counties' distance? Let's look at a few examples. Miami. Dade and Broward counties have major international buyer interest. Central Florida, especially around Orlando and P. Oak County, offers affordable inventory and fast population growth. And Southwest Florida, cities like Cape Coral and Fort Myers, continues to attract retirees and cash flow investors alike. In other words, there isn't one Florida market. There are many micro markets, each with its own rhythm. The key is learning which ones match your budget, your timeline, and your appetite for risk. Part 2, defining investment categories, backed by graphics showing icons for each category. To make smart decisions, it's important to understand the 4 primary investment categories in Florida real estate. 1, residential properties. These include single-family homes, duplexes, townhomes, and condominiums. They make great flips or rentals because demand stays high. Residential properties are often easier to finance and resell, and they tend to perform well in both strong and moderate markets. 2, vacant land. Florida is famous for land flipping and infill lot investing. Many investors buy vacant parcels directly from motivated sellers and resell them to cash buyers, developers, or mobile homeowners. It's a simpler model. No tenants, no renovations, just research, marketing, and negotiation. We'll explore this strategy in depth later. 3, commercial properties. Think of small retail plazas, office buildings, or mixed-use developments. Commercial investing requires more capital, but offers longer leases and often higher returns. Florida's rapid business growth, especially in cities like Tampa, Sarasota, and Jacksonville, makes this segment worth watching. 4, short-term rentals, STRs. This category has exploded thanks to platforms like Airbnb and VRBO. Vacation rentals in places like Orlando, Miami Beach, and the Florida Keys can generate strong income, but they come with unique responsibilities, from licensing and cleaning management to occupancy tax compliance. Why you need to understand local ordinances, because every county defines STR rules differently. Each category has its pros and cons, and we'll break them down later in the course. But right now, think about what type of investor you want to be. Are you drawn to the fast flip, the steady rental check, or long-term value appreciation? Knowing your lane early on will shape your entire approach. Part 3, setting realistic expectations, returns, risks, and timelines. Real estate investing in Florida can be profitable, but it's not a get-rich-quick path. Let's be honest. There are always moving parts: interest rates, insurance costs, local zoning rules, and even hurricane seasons. Successful investors plan for these variables rather than trying to predict them perfectly. Returns. Residential flips can yield anywhere from 10 to 25% profit margins if done correctly. Long-term rentals often bring 6 to 10% annual cash-on-cash returns, with appreciation layered on top. Vacant land flips can deliver quick 20 to 100% gains on smaller lots, especially when bought off-market. Commercial and STRs vary widely, but can exceed those numbers under the right management. Risks. Florida's advantages come with challenges. Flood zone exposure, high property insurance rates, and rapid market cycles can affect short-term profitability. That's why due diligence, verifying property data, permits, and comparable sales is critical before every purchase. Timelines. Flips typically run 3 to 6 months from purchase to resale. Rentals generate passive income but build wealth slowly over years. Land deals can close in 2 to 6 weeks if you're working with cash buyers. Patience and process matter more than speed. If you remember one thing from this module, let it be this: real estate rewards preparation. Study your market, know your buyer or renter, and protect your investment with knowledge and good systems. Part 4. Course goals and next steps. Throughout this course, our goal is to turn you into a confident Florida investor, while you'll learn not just how to find properties, but how to evaluate, negotiate, and close profitable deals, even if you're starting small. Over the coming modules, we'll explore market research methods, finance options, land buying strategies, and long-term wealth planning. Every lesson builds on the last. So that's your foundation. The Florida market is fast, diverse, and full of opportunity, but it rewards those who learn the rules and move with strategy. In Module 2, we'll break down the state's regional markets, population data, and upcoming growth trends so you'll know exactly where to invest next. Thanks for joining me. Let's keep going and turn your knowledge into action.